and welcome to my channel. For those of you new, my name is Dave and I work in financial services. On these videos, I'm mixing journey towards financial freedom, financial well-being, financial products, so you, like me, can reach your goals sometime in the future. Now, it's not to boast or brag or say, look at me, but to give people hope. If I can build a portfolio over 6 figures, you can too. If you invest regularly, you think long-term, and you create within a tax-free investment wrapper. So let's look at this video about my stocks and shares I set for a review of March 2025. So we started the month at 131,186. We finished the month at 134,760. So our portfolio increased by £3,574 a month, but there's a reason. Year to date, we've got annual returns of 2.52%. Now, why did the portfolio increase when the markets are going down? Well, we put contributions of £9,500 in before the end of the tax year. And year to date, if you look at the graphic, we've put over £13,500 in. So the portfolio's increased, but obviously nowhere nearby contributions, because what's happened in the last few weeks or last few days of the month with so-called Trump tariffs. So what are the aims of the portfolio? Well, we're looking for annual dividend growth or annual yearly growth of 10%. We're looking at annual dividends this year of £5,000 and a year-end portfolio value of £153,000. Our platform providers charges fees of £16.97, which is by average. It's based upon a percentage of our portfolio value. So where are the funds held? So predominantly UK based, 60%, Americas nearly 30%, and Asian American markets 10%. Now look at the following graphic. We've received no dividend a month, but across our shares we've got a yield of 5.87%. We received £64 last month, so well below expectations, but we've had some great results. We've got some great dividends due in May and April, so that will be back on track. But it just goes to show we will have good months and we'll have bad months in dividends. Dive into the holdings. First of all, we'll do our shares. We own 10 shares and all in profit just. It makes up 66% of our portfolio, or £66,000 of our portfolio, 48%, of which 43% FTSE 100, 5% in the FTSE 250. And we've obviously topped it up through contribution this month. So let's go through the holdings. Our largest holding is Lloyds Banking Group. 20,163 shares, £14,500, 11% of our portfolio. Will give us a very nice dividend, shall we say, in the middle of May. Yield of around about 4 or 5%. We own L&G, the insurance company. We did top up £1,000 in a month. Seems a bad opportunity. It's got a nice yield of 9%. We own 5158 shares, £12,500, nearly 10%, and it will give us a dividend next month. Final dividend of 15.63%. We own Aviva, 1,898 shares, £10,500, again a yield around about 9%, 8% of our portfolio, and it will give us, shall we say, a final dividend next month of 23.8 pence per share. Something else we topped up, NatWest Banking Group. We now own 1,230 shares. We bought another £1,000 shares, £5,500, 4% of our portfolio. It will give us a nice dividend at the end of April, and the government again has been reducing its stakes. It now owns less than 4%, so the shackles are nearly off. We also own Barclays, 1,651 shares, nearly £5,000, 3.5% of our portfolio, and it will give a nice dividend during the month of April, again a yield of around 4 or 5%. Another dividend pay in April is HSBC. We own 535 shares, £4,500, 3.5% of our portfolio. It will pay a quarter dividend, as I said, during the end of the month, but we've done it away from our, shall we say, UK banks. Another fund we've held or topped up this month is AJ Bell, our platform provider. 988 shares, we bought another £1,000, nearly £4,000 portfolio, 3%, but very cash rich, is growing customers, is increased dividends, assets under management, but what we see as a growth company. And our final top up was Phoenix Group, the pension and insurance provider. 639 shares, again another £1,000, £3,700 in the portfolio, nearly 3%, but again dividend 27.35% increased, and that would be paid, shall we say, in May. We own Card Factory, the retailer, 3,960 shares, just over £3,000, 2.5% of portfolio, very cash rich. Is making profits, dividend increase. It is opening new shops, but it struggles, shall we say, because of NI costs, labour costs. But it is a very cash rich company. It is expanding. And then finally, we own Sainsbury's, the retailer, 923 shares, £2,000, nearly 2% of portfolio. Everyone needs food. It's a, shall we say, struggled lately, but it has been, shall we say, increasing market share with Tesco's. So some good shares, predominantly financial services based. But as we found the month, okay, we've seen it's a buying opportunity. We've got some great, shall we say, yields in there. We've got some great dividends due, and they will all be reinvested. But they're all what we call long-term holds. We've got no risks in any shares in the foreseeable future. Now let's dive into, shall we say, the funds held within the portfolio. So at the moment we own £69,000 across our funds. 54%, 9 funds, 5 in profit, 4 in loss. Now our largest holding is a passive ventures fund, a tracker fund we just switch off, done by our platform provider. But it's £24,000, 18% of our portfolio. We own a Fidelity World Index fund, £16,000, 12%. Very low fees of 0.1%. Owned a collection of shares, around about 400 shares, and we did top up in the month with £3,000 as a buying opportunity. Just switch off, does what it says in the tin, but it gives a growth last few years of around about 9-10%. Another fund we've topped up is a Legal and General Technology fund. £2,500 we topped up, £15,000, 11% of our portfolio. Slightly higher fees, but great results. Done about 10% year on year last few years, but it has struggled at the end of April because of, shall we say, what's happened in America. But we've done it for the division. We see it as a buying opportunity. We're just going to hold that shares or that fund for the foreseeable future, and it does pay small dividends, shall we say. Some funds that have struggled though is the Fidelity China Fund, £2,600, 2%. An emerging market fund, £1,274, less than 1%, and a second emerging market of £1,260, less than 1%. Now we do say when they're going to get back in profit, we're going to sell them and reinvest into our other funds, but it never seems to touch daylight. But we get there, and obviously what's happened lately is obviously affected it. Who knows what will happen moving forwards. We own a Russia fund. We put £500 in. It went to £600 plus. Struggles ever since because of Russia-Ukraine conflict, but it's about £225, but it makes up 0.17% of our portfolio. But it just goes to show we've invested in an area and it's backfired us. But we're not going to sell at a loss. Now we did ring 2 shares for holding for a specific purpose. We kept it separate. We bought an S&P 500 fund. Now we did put £3,000 in. It was worth nearly 4. It's now struggled what's happened last few weeks in America. It's now worth 3.2, but 2.4%. But we've done it for a ring fence reason. And we've also done an STFC All Share Index Fund. We put 5,000 in. It's now worth 5.5. So it's in profit, but it makes up 4.1%. But we bought them funds because we didn't want to hold cash. But we just switched off. We've done them for a good reason. So a collection of shares. So we've got some passive funds, we've got some growth funds. We've struggled, shall we say, with China emerging markets, but it just goes to show we've done it because we were solely UK solely based. We're just going to keep them funds, and they're going to give us dividends growth over the long terms if it's done for the valuation, but my own personal business. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you in the next video. But it's not a get rich quick scheme. You will put up a vote. You will both decide for a vote. If you think long term, you invest regularly, and you create an action plan. If I can do it, you can do it.